Юрий, здравствуйте. Меня слышите?
Да, слышу отлично. Добрый день.
Добрый день. Все. Давайте попробуем подключить вашу презентацию. Сможете зафейлить ее?
Давайте, да, сейчас буквально. Вот, и она.
Сейчас. Вот. Все, вижу, да, экран наш. Так, в
Угу.
принципе, уже время, уже 15. Можете начинать, в принципе.
Можем начинать. Да, сейчас посмотрим. Аудитория. Мы никого больше не ждем, да?
Да, уже ожидают.
Давайте дадим, может быть, дадим участникам буквально 30 секунд. Еще если кто-то подключается, поскольку сейчас у нас ровно 3 часа дня по Лондону. Ну, тогда, пожалуй, можем начинать. Спасибо большое всем присоединившимся. Меня зовут Юрий Романенков. Я академический директор программы Next Generation Digital Strategy, то есть цифровые стратегии следующего поколения в Лондонской бизнес-школе, где я преподаю стратегию. И параллельно часть моей работы в консультациях. Я консультирую инвесторов и бизнес-лидеров по вопросам того, как технологические изменения превращаются в новые источники конкурентного преимущества. И сегодня я хотел с вами поделиться несколькими наблюдениями относительно того, как...
Юрий, можно
Да,
вопрос,
да.
пожалуйста? У нас лекция просто на английском. Вы сейчас на русском расскажете? Да, да, да.
По-английскому делаем, да? Мы просто
Да, да,
говорили с
да.
вами по-английски. Окей. Shall I restart then? We'll restart in English in that case. So that just very briefly then, just a very short introduction. My name is Yuri Романенков, and thank you very much for everyone joining. I am the academic director of the Next Generation Digital Strategy at London Business School. And I'm also a partner with a firm called Clarion Strategy Partners, which advises investors and business leaders on how technological change translates into new sources of competitive advantage for firms. And what I wanted to discuss today was how digital platforms work, and more specifically, how do you win as a challenger platform? So I spent probably the best part of the last 10 years studying a variety of digital platforms. So platforms, of course, are businesses that connect various users in a network. The likes of Uber, which connects drivers and passengers, the likes of Airbnb, which could connect hosts and guests, like a lending platform, which would connect lenders and borrowers. Or in our case today, that we're going to dive a little bit deeper into classified ads in real estate, which of course connects buyers and sellers, or estate agents and buyers, letters and renters. And one of the things that many of you who will have also looked at platform businesses will see very clearly is this idea that of winner takes all. Very often when people talk about platforms and when people invest in platforms, what they will say is you need to grow your user base, grow your gross transaction value, make sure a lot of transactions go through you so that you could then become the winner who takes all and force your competitors out of the market, at which point you appropriate the economic profit within that industry. And that, of course, was the logic between different categories behind lots of platforms, like, for example, Uber, which we used as an example just a couple of minutes ago. Uber is exactly a story of that, right? It started in 2009, but of course, it turned its first profit in 2023. So all of that time before that, they've accumulated in excess of 30 billion losses to force their competitors in various markets from competing with them and become this winner who takes all. And of course, the argument that we're very often offered to substantiate that is this whole idea of network effects, right? The idea that when network effects are present in an industry, then if your platform facilitates them, like, for example, mediating between drivers and passengers like Uber, network effects can become a very powerful source of competitive advantage. Which, of course, raises a pretty major question, which is, how do you win? How do you create and capture value if you're not the number one platform? So it's for an Uber or an Airbnb, it's that are winning in their respective categories. That's good news. The network effects are strong and they're sitting on top of them. But if you happen to start a competitor to them, or if you happen to invest in a number two or a number three or a number four player in a platform industry, in an industry with strong network effects, what can you do? Does that mean that you're condemned? Does that mean that there are opportunities for you to still be able to create value for your users on however many sites you're operating? And can you potentially capture some of that value for your shareholders through your margin? Because, of course, if you can't, then that becomes a very sad story for you and your investors. But our research and our practice working with these businesses seems to suggest that there are still ways that these companies can pursue a successful play as a challenger platform. So that's why I'm grateful for this opportunity to talk to you this afternoon, to specifically see the world from the eyes of the challengers. And the case I wanted to talk to you about, which I think is a fascinating example of exactly this happening, is the case of real estate classifieds in Germany, where we've got a fair number of players that have been competing ferociously over the past decades. And see, if you were not the number one, then how would you be winning? So what I suggest we start with this is, I wouldn't imagine many of you are necessarily very familiar with real estate classifieds in Germany, although many of you will probably have used real estate classifieds, whether because you're looking to rent a flat or buy a flat or perhaps sell one. But I wanted to give you a little bit of an overview first of what's going on in real estate classifieds in Germany. So give you a little bit of the understanding of that broad strategic context, and then we will discuss what levers could you be pulling as the challenger platform. So the way a classifieds platform work, of course, is like I outlined. What it does is it connects typically connects buyers and sellers of real estate, or in some cases these being mediated by agents as well. So that's an important part of that picture. So what we see therefore is we see that there are strong. So whenever we think about platforms, we think about do these platforms have strong network effects or don't they? And what we see with real estate classifieds generally worldwide, Europe-wide, is that there are strong network effects. We do very much see that in Germany. So, for example, every bubble on this page is a real estate classifieds player. And what we see on the horizontal axis their annual web traffic to the platform websites, and on the vertical axis we see the annual compounded growth rate. So basically how much they'd be growing every year between 2021 and 2023. And what we do see is we see that on the right hand side, we see that the market is fragmented, right? There are no blockbusters. There's not one player representing something like 95% of the total volume. But there are clearly significant network effects that result in an advantage for the strongest player there, Scout24. And Scout24 is the bubble on the right-hand side, which basically has close to 120 million annual visitors to their website, whereas the number two player, Kleinanzeigen, has only got about 45. And Immowelt and Immonet, who are the number three player, number 3 and 4 assets, but they form part of the same company, combined have about 60 million. So Scout24, almost 120, Immowelt and Immonet combined, two different brands at about 60, and Kleinanzeigen about 45. The reason that network effects, of course, exist in real estate classifieds is because estate agents are interested in reaching the largest possible number of buyers, resulting in them listing their properties on the leading platform. So if I had to choose one leading platform in Germany to list, if I wanted to reach the most people, I would of course be listing at Scout24, and no, for example, not on Meinestat or not on Wohnungsbörsen. So this, if you were then an investor in Kleinanzeigen, if you were an investor in Immowelt, Immonet, you would be asking yourself questions of, what is going to happen? If I've got a competitor who's got 45% of traffic, whereas I'm only capturing 20% of total traffic in Germany, am I condemned to some sort of long stagnation, or is there potentially value creation play for me too? When we look at how that advantage evolves over time, we also see that very often, those of you into real estate, you will probably be familiar with the idea of a buyer's market and a seller's market. A seller's market where there are few properties, so not a lot of supply and a lot of demand, and a buyer's market where basically there's a lot of supply and not a lot of demand. So buyers have the upper hand, and of course the seller market where there are not a lot of houses, sellers have the upper hand. They've got more negotiating power. One of the interesting observations that we see from the research of German real estate classifieds is the German property market has turned post-COVID. It turned from very much a seller's market where everyone was keen on buying or renting a flat, and then later on, there's the supply of properties has increased, and the demand has dropped. So buyers very much had more of their pick of the crop. Which then, if you're a real estate agent, what you would do is you would try to reach the absolute widest possible audience. So, and what we're finding is, as you can see on this chart here, which basically shows you, before we looked at traffic, now we're looking at the relative interest in the different online assets, where what we're looking at is we're basically looking at the index of Google searches, a rolling 12-month average of Germany or real property listings in there, and what we see that this advantage that we saw on the previous page of Scout24, which 40% of total traffic, that advantage is actually amplified in the buyer's market, because basically what happens is the real estate agents, they will try to reach the absolutely widest possible audience. So therefore, you will then have a much stronger advantage even than you had before. So you'll see the bright turquoise line that represents Scout24 on the top, the delta between them and players number 2, 3, and 4, the 2, 3, and 4 digital assets keeps declining fairly strongly, and they keep a fairly steep trajectory. So basically, in the buyer's market, real estate agents do tend to focus even more on the top platform, partly because it's important for them to reach even more people. And by the way, real estate agents come under pressure. So if before they might have listed on 2 or 3 platforms, as the actual real estate agent margins come under pressure, they suddenly start prioritizing the platforms they list on, and they would potentially list on a platform that is just one as opposed to 2 or 3. And of course, if they were to pick one of the 3 or 4, they would obviously pick the largest one, because that will reach the absolutely widest audience for you. So now then, basically looking at the evolution of that traffic and how that evolved, what we see is basically that there are still, despite seemingly the strength of network effects, we see that over the really long term, so something like over 10 years, we were looking here at the share of total traffic to real estate classifieds in Germany. Over 10 years, we see that despite the strength of network effects, this competitive market is not quite flat. You do have a reallocation of market share. In this case, basically what we see is there has been a successful market entrant. So the one that we saw a couple of slides before, Kleinanzeigen, we saw on the previous slide as well. Here in purple, or violet, depending on how you want to call this color. Kleinanzeigen did enter the market as recently as 2015, which doesn't sound like recent, but of course, in the grand scheme of business, is not a very long time. Their competitors have been around for much longer. And Kleinanzeigen entered in 2015 and was able to build a market share of 18% by 2023. The curious bit here that you will observe is their market share gains were to a large degree at the expense of the number 2 and number 3, which is a really important strategic insight, again, in platform-mediated network categories, where, because if we look at 2014, before Kleinanzeigen, we had number 1 player, Scout24, with a 50% market share. And the number 2 player, combining ImmoWelt and ImmoNet, who collectively will have accounted for 31% market shares. That's the 2 blue segments under 2014. 17 plus 14%, of course, will be 31%. So they were something like 2/3 the size of the, 60% the size of the largest player, right? 31 versus 50. However, when we look at where the 18 percentage points of market share in 2023 came from, it didn't really come from that many incremental visits. There were more incremental visits, and we do see that Scout24 has also lost market share. They're now 25, right? So some of that 18% market share will have come from Scout24, but a lot more of it came from the number 2 players. So 14% plus 6% in 2023, we're now down to 20% market share, down from 31, right? So they've basically collectively, in terms of traffic share, will have lost a third of that business. So the lesson we're learning from all of this is that generally new market entry into a platform business will be significantly worse news for number 2, 3 players who don't have the strong network effects than the top player that does. And that, of course, that is a lesson for us to keep at the back of our heads as we think about challenger platform plays. What we then, though, see, which is a very important part for us to look into, is this phenomenon of network clustering. And the network clustering is basically a phenomenon where platforms will serve. So, for example, if we look at Uber, right? Uber, if you're in Uber, we connect drivers and passengers. So if I'm an Uber driver in London, I will not really care about the number of potential passengers in Paris or Rome or New York City. I will only really care about the number of passengers in London, and they will create value for me through those indirect network effects. Whereas, for example, for Airbnb, Airbnb's network is not clustered geographically. It's a global network where if I'm a host in London, I've got a flat to offer on Airbnb to potential guests. I actually don't really care about the number of guests who live in London. I care about the guests who live in New York City and live in Paris and live in Tokyo and live in Shanghai, because they will be coming to London, because people don't tend to need Airbnb properties in their own city, which means that global network makes Airbnb a lot more difficult to compete with, because if I wanted to compete with Airbnb, I would need to replicate the entire global network. Whereas if I wanted to compete with Uber, I could actually compete with them in any individual city. I can start by just competing with Uber in Nashville, Tennessee, or I can just start competing with Uber in Lagos, Nigeria, right? So but because I only need to replicate that particular network. And this is an important thing that determines basically the intensity of competition between platforms, is the clustering of the underlying network structure. And what we see is with real estate classifieds, of course, unsurprisingly, there is quite strong user clustering, right? They will cluster around regions, something we demonstrate here. For example, the challenger that we were looking at, ImmoWelt and ImmoNet, have got a very strong position in Hamburg, right? Where actually, so these are the number of listings for sale, so number of houses and flats being listed for sale by the different platforms we looked at. So Scout24, the market leader, in turquoise, ImmoWelt and ImmoNet combined in dark blue, and Kleinanzeigen in purple. And what we see that in pretty much all places, or most places, Berlin, Munich, Cologne, Frankfurt, there'll be significant advantage to Scout22, very much in line with what we saw on our previous charts. But for example, Hamburg, because again, if I'm selling, there will be people moving between German cities, that's absolutely true, but largely housing markets will be clustered on a city level. And what we see is, for example, in Hamburg, we at ImmoWealth and ImmoNet, they have actually a higher share of listings than Scout24, which basically means that you still have pockets of growth which you can tap into, and they've got that strong position, whereas Scout24 has less so. This is just one example of clustering around a city, much like Uber, but there are different forms of clustering that will be relevant when you think of a platform play. In cases of real estate, that, for example, would be around the value of the property. Or the type of the deal, whether you're selling or whether you're renting, or whether there are any other shared properties and so on. So there will be different clusters that will enable you to compete with even potentially some of the strong leaders like we've got here with Scout24. And ImmoWealth and ImmoNet is an example in Hamburg, but then, for example, Kleinanzeigen has a stronger position in lower property value and rent. So whereas Scout24 will be looking at the whole market, Kleinanzeigen will be looking at some of the the value segments, the lower property value, where they're able to target these cheaper properties. And again, in those we don't quite have the data as clear for it as we do here for cities, but we have indications that this is how they pursue their play. So this gives you a bit of a perspective at the sort of the broad competitive landscape of German real estate classifieds that form the foundation for this theory. By the way, thank you to those of you who are sharing your questions via the chat function of Zoom. What I will do is I'll keep monitoring them, and then we'll leave some time for me to go through some of these questions at the end. Of course, you'll also be able to ask questions in live voice towards the end. But thank you for submitting these. It's obviously quite a lot of fun to see which of these ideas resonate with you and how we can make them more helpful. So let's now that we've learned sort of the what, let's try to understand. So if you were ImmoWealth or ImmoNet, if you were in a position where you've got a much stronger competitor and you need to figure your way out of that, then what we need to do is we need to look at basically what are the levers that you can be pursuing. And this is the framework that my colleagues and I have developed for it. If you're not the number one, if you're the number 2, 3, 4 in a platform mediated market, they tell you it's winner takes all. Not all is lost for you. And critically, what you need to do is you need to explore strategies. And this is probably, if there's one insight that I can leave you with today, is that challenger platforms need to explore strategies that are different than head-on competition. So back to some of the original observations I had in the beginning about Uber, which said Uber was making stratospheric losses for 13 years before turning a profit. Their accumulated losses were $32 billion. As a challenger platform, you are much more likely to run out of cash, run out of your investor patience before you're able to win against the incumbent leading platform. So head-on competition, saying, let's subsidize our users, let's give them a better deal on the demand side or the supply side or the third and fourth side of these platforms. Let's just subsidize everyone to create growth that will then force our competitor out of the market. If you are starting with that strategy, you are very likely to fail. So if you're a challenger platform, if you're the number 2, 3, 4, you actually need to be a lot smarter than this. You can't just throw money at the problem, for lack of a better expression. What you need to do is you need to find levers that will be highly differentiated. And there are a few of these levers that we want to draw your attention to around the broad questions of where you play as a business and how you win as a business. So more specifically, let's start with where to play. One of the things you can do is you can invest in the relevant clusters where there are strongest network effects. We talked about clustering just a minute ago, and we'll dive into how you can concentrate your investment into clusters where stronger network effects are still available and you've got a strong right to play. So that's choosing about where you're going to play, and ideally not playing in the same space as of course, the market leader. But then also, irrespective of where you choose to play, you've got the how to win question. How do you still create and capture value where you've got a much larger competitor? And the two big themes around it are theme number one about how do you grow the pie for everyone? How do you create a winning value proposition that is sort of creates incremental growth for the entire industry and is not necessarily about winning share from your competitors? And that has sort of two sub-levers. You can do that by adapting the product features to the priority clusters. Basically, what you do is you make the features of your product more attractive to the needs of the clusters that the existing players might not be serving very well. Again, we'll dive into it in a minute. Another option to grow the pie for everyone, again, more to just create value rather than necessarily capture market share, is to leverage various complementary products or services. So what you do is you use basically the existing network, and then you build adjacent platforms, or you vertically integrate into other products and services. So that basically that creates complementarity value for your users on the demand and the supply side. So this is how you can grow the pie. And again, we'll dive into this in a minute. And then finally, what you can do is you can actually increase your own piece. You can capture more market share. And you can do that largely, in our view and in our experience, in the cases that we've observed, including German so we do reduce the cost of multi-homing. Multi-homing is a phenomenon where a user would be using more than one platform, right? So, for example, what we do is if I'm using Uber and Free Now, which is a Lyft product here in London, I can be using them simultaneously, right? So I can check how soon an Uber can turn up and what it's going to cost me, and I can check Free Now by Lyft, how soon are they going to turn up, and what is that going to cost me? And similarly, many drivers, I'm sure you will have seen drivers having two phones in their car, will be on both platforms at the same time, and they will take an order from Uber and then will take an order from Lyft next. That, of course, multi-homing is bad news for the leader, and is good news for the challenger competitors. And that's a very important thing for us to bring up. So we'll look into that as well. So what I suggest we do is we take a few minutes to dive into some of these to look a little bit more specifically as to how you can approach it. So looking at the first of these, and I believe that my slides are taking a second to move. Let me just try that again to make sure that the slide will have moved. Okay, so there we go. Remember we talked a few minutes ago, we talked about clustering. I said Scout24 has got lots and lots and lots of cities where they've got the strongest position. But for example, Immowelt and Monet have got a strong position in Hamburg. So as the simplest example, they are clustered around cities. So what you need to do in order to do well as a challenger is you need to understand the clustering, right? You need to figure out, map these clusters. How is your platform cluster? Is it user segments? Is it value of transaction? Is this any other vertical? And they can be by very different sort of criteria. They can play that. So, and once you've mapped that, what you do is our argument and the lever that we're proposing here is that you need to invest. You need to identify these relevant clusters that have the strongest network effects and invest in those where you've got the strongest right to play. So on the left-hand side, I've got this matrix for you, which basically on the vertical axis has the strength of network effects. On the horizontal axis, has got the firm's right to play. So on the vertical axis, the network effects, again, just to recap, so clusters will be these groupings of users on the different dimensions, right? So we talked already about the kinds of different clustering patterns that real estate classifieds will have. So network effects will have that value on a cluster level. And the way you measure it, and by the way, I talk of this obviously in slightly qualitative terms, but if you're doing that practically, you would actually be looking at very much in quantitative terms. You'd be looking at the data of this, and the way you measure the strength of network effects within one cluster is the elasticity of the user base on the demand side versus the supply side, which is basically fancy jargon for taking if I add 1% more supply, how many more percent of demand will I get, right? So the more elastic that is, the stronger the network effects there are. So if I add 1% of supply and I create an extra 5% of demand side users, that means network effects are very strong, right? And the factors that affect the strength of that network effects will, by the way, be very different. It could be the concentration of the user base. So, for example, the reason that Uber has got very strong network effects is because they're dealing with an incredibly fragmented user base on the demand side. They're passengers, and they're looking at an equally fragmented user base on the supply side, the drivers, as opposed to, for example, Netflix, also a platform where you've got the viewers and you've got the content producers. But of course, content producers on Netflix are a lot more concentrated, including Netflix themselves. They will have blockbusters. Depends how preferences differ, right? So the reason that real estate classified is a great case of network effects is because people have very different preferences for houses and apartments. I might want the really high ceilings and a very classic interior and a central location, and someone might want to be in the hipster area and will want a loft conversion and will want to have lots of dedicated spaces for their hobby. So this will be that will be very, very people, and lots of people have very different preferences, meaning the supply side is very heterogeneous, if you want to sound scientific. And similarly, the supply side is very heterogeneous. There are lots of different houses and flats. So in that sense, it's almost the perfect case of network effects here. Similarly, there will be different elements that will explain why some of them will be stronger than others. And the one interesting case example that I talked about before, so Kleinanzeigen, the one of the challenger platforms that has built this 18% market share over the course of a decade, is that what they focused on private sellers as opposed to estate agents and cheaper properties. So they took basically a more fragmented segment, which resulted in fairly significant market share gains as they built this organic traffic. So that's basically look at where you've got stronger network effects. The other dimension that I talk about is the firm's right to play. So what is your existing position in the cluster? What is your brand strength? What is the fit with the benefits that the users of the platform seek? Are all important questions that determine, do you have much of a right to play in that cluster or not? And you, as with any 2x2 matrix, you end up with 4 quadrants, and the 4 quadrants basically are, so the worst of all of them is the bottom left one, where it's basically a quadrant of value destruction. So there's not a lot of network effects, and you've got no right to play. So basically means there's an incredibly low probability of you being able to profitably grow, and you've got no position to defend. So these clusters are not clusters where as a challenger you should focus. That's not your way to play. There's the obvious 45 degree cluster here in green on the top right, which is the potential advantage, which is where we think you should be focusing on most in terms of investing in your user base. Whether you do that, by the way, organically through customer acquisition spend on Google and Meta and TikTok and other assets, or whether you do bolt-on M&A, you will acquire other platforms who have exposure to those clusters. Why? Because this is where you've got this higher probability of a more sustainable, strong position, a lower customer acquisition cost, and a lower churn in your customers. Now, there, of course, as always in platforms and in matrices, there will be interesting quadrants that are off the 45-degree line, which in our case here, if we look at the top left is where network effects are strong, but there are high barriers to entry. And these high barriers to entry are potentially problematic for you, right? Where there might be strong network effects, so someone is likely to be able to build a winning position in that cluster, but there might be very significant investments that are required to achieve that strong position, lower customer acquisition costs. You may not have the resources that Scout24 would have to find that, right? So therefore, for you, that's a much riskier option than a cluster with strong network effects where you have a stronger right to play. And similarly, on the flip side of that, the bottom right, where you've got a strong right to play, but you find the network effects are not particularly strong. So there's less likely to be a clear winner emerging in there, like, for example, Immowelt emerged in Hamburg. Why is that? Is because this is what we would call a perpetual pressure cluster, where what is likely to happen is you're likely to basically just continue competing very aggressively because there are no strong network effects. Even though you have the high right to play, it will be difficult for you to preserve a market position. You'll need to continue constantly burning money to build that position, which will be obviously a very negative impact on your margins. So this is, in summary, how you think about where to play. How do you choose as a challenger platform? You're looking at a cluster network structure. Which clusters are the attractive clusters for you? These will be the clusters that will have the strongest network effects, where you've got a stronger right to play. Now, but what do you do then once you've chosen the clusters? How do you win? So let's look into how to win, and let's look at some of the more specific examples of that. So let's look at first this idea of basically of growing the pie. Right? We said what you want to do is you want to create a winning value proposition. You want to make sure that there's more incremental growth that creates more users, which is then good news for both you and your competitors. It's fine to create win-win situations. You don't necessarily need to harm someone to win someone. Situations where there's a positive sum game are always arguably the best. And we see two main levers, like we said. So what you can do is you can adapt some of the product features to these priority clusters. So once you've chosen your cluster, you can make the product features of yours different from competitors in a way that's very attractive to the needs of users in those clusters, where the existing players are underserving them. So there's a pain point that's not been resolved by an existing player in those cluster. So, for example, there is an interesting player in German real estate classifieds called wggesucht.de. And what wggesucht does is they actually focus on cheaper rentals, right? So looking at young professionals and students, people who've just moved to a city that go to university or starting their first job. Germany's also got expensive real estate. They might not necessarily want to live on their own or be able to afford to live on their own, frankly. So they might be looking for flatmates. And what then tends to happen is they then, if you're looking for flatmates, then a standard real estate platform will not actually be that useful for you because it's looking for people to rent directly. So what they will then do is they will basically look at renter profile. They will create functionality for renters to connect with other people who might be looking for flatmates, right? So if I go on Scout24 or if I go on Immowelt Immonet, I'm not going to be able to, I need to already have the flatmates, and then together we go on Scout24. But if I haven't got a flatmate yet, my needs are not served by those platforms. There is a pain point. So then I find wggesucht, and wggesucht gives me an opportunity to find a flatmate and find the right property for me and my newly identified flatmates. So this is basically where we are with adapting product features. There are other ways of doing this where, like we said before, what you can do is you can grow the pie by creating complementary products and services that will make your platform more valuable because it's consumed together with other products and services. And a couple of ways of doing this is you can either develop adjacent platforms. So basically you either build or you acquire through M&A platforms which will connect the users of your core platform to other sort of third parties, other users that they might find useful, that will enhance the value proposition to the user. And there was an interesting example in Russia, a platform called Drom.ru, which is basically a marketplace for cars. So what it does, it bridges its network of sellers and buyers, because of course, if I've got a car marketplace, like an auto trader, I will be connecting sellers and buyers of used cars. But what they also did is they created a forum that connects buyers and buyers called drive2.ru, which is basically where buyers of used cars can share insights, can share expertise, can find solutions to their potential problems, ask questions, and so on. And drive2.ru has basically got 12 million unique monthly visitors, integrated ads from Drom.ru, the main transaction platform. And actually 12% of Drive2.ru traffic will then have converted into Drom.ru traffic. So what you do is you basically create traffic for yourself. You create users where if I've got both a platform that connects a buyer and a seller and lets me also find expertise from other buyers, that can be incredibly valuable for my users, which my competitors will not have. And therefore, they will need to go to my platform. And then a final bit here around how you can also leverage complementers is through building complementary products and services, not necessarily network-based, but just specific features that will integrate with other businesses that will be useful if they're integrated in a single bundle. Like, for example, one of the leading American real estate marketplaces this time going outside Germany, Zillow. They basically got this idea of instant buying with Zillow offers. They've got home mortgages with home loans, Zillow home loans. They basically buy a mortgage broker. So not only can I find the house that I want to buy, but I can also get the mortgage for that straight away with the same player. And other features that will be valuable for some of their users, like, for example, when they want to look at the house without having to go all the way to see it first. So again, lots of levers for you to be able to grow the pie, create a winning value proposition by either adapting your product feature to the specifics of that cluster that you're serving, where there might be pain points where your competitors who are more generalists are underserving them, and leverage your complementers in a way that, again, that strengthens your position to grow the pie. But also, in addition to growing the pie, you want to make sure, of course, that you've got enough of a piece of that pie for yourself. And here, something that we mentioned about 10 minutes ago was this idea of multi-homing, right? And multi-homing, of course, is again encouraging consumers to use multiple platforms, right? Because typically, again, if you're a leading platform and there are very high multi-homing costs, it's difficult for you to multi-home, you're just going to end up staying with the winning platform. I'll give you an example. If you look at video games, with video games, multi-homing costs, so basically the cost of using multiple platforms, will actually be buying another gaming console. If you look at Xbox, let's say Microsoft Xbox and Sony PlayStation and Nintendo, if I own an Xbox, then for me to also play PlayStation games, so sort of multi-home on two platforms, I will actually need to buy a PlayStation. That will be a few €100, right? So that's a very direct financial cost. There can also be non-financial economic costs of multi-homing where I need to learn to use a certain platform, right? So different software, for example, if I'm sort of been used to using one software package, I need to learn to use software package, invest 2 days of learning that will be multi-homing costs for that. So in this case, if you're a market leader, what you do is you try to discourage multi-homing as much as possible to protect your market position and reduce the price pressure on you, because the less multi-homing there is, the less the competitive intensity, the less the price pressure, the higher the margin. So what Uber would do, for example, is they would create exclusivity features for drivers, right? They will try to sign up drivers on exclusive contracts whenever they can. They will try to install loyalty programs, again, for drivers or for passengers. Uber One is an example now, right? So every time you're choosing between Uber and something else, where Uber will give you a kickback of 10% in Uber credits and another platform won't, that's effectively a 10% discount if you stay loyal and don't multi-home, that you can then spend on on a delivery of your favorite pizza through Uber Eats. Same for drivers, by the way. Lots of drivers, if you talk to them, will tell you that the classic one would be, for example, if you complete 12 rides between 7 and 9 a.m. in the morning, you'll get a bonus of $35. Why? It's so that the driver in peak traffic would not be tempted to go to Lyft, for example, take an order from Lyft at that point, because their multi-homing cost would be basically losing the bonus that Uber would find. So this is what you do if you're a market leader. So if you're a challenger, what you need to do is you need to do exactly the opposite. You need to encourage multi-homing to damage incumbents' existing advantage. And how do you do that? You can do that through offering trial periods of various sorts, various freemium options. You try to basically to encourage people to try, right? So that they don't need to subscribe. There are no onboarding costs that are already major. You simplify the process of copying listings from other platforms. So that's, for example, a very interesting one. So Zoopla, which is the number 2 classified adverts player in the UK, next to Rightmove, a much larger number 1 player, they specifically build the architecture of its listings, because the way these classified adverts work on the supply side, real estate agents will be adding classifieds, will be adding an advert when I want to sell a house, so there'll be a real estate agent down the road who will be typing up my advert into that platform, right? Inputting that data. So they will certainly be doing that for Rightmove. So how can Zoopla ensure that they also do that on Zoopla? Well, they make it easier for the estate agent to do that because the architecture to do that will be essentially identical to Rightmove. So as an agent, I can just copy and paste, duplicate my listing to a Zoopla, right? And then it's also about providing evidence of the leads that estate agents will get through the platforms. There's not exactly a lot of evidence that real estate agents necessarily have. So if you can demonstrate to them where the leads came from, which platform that was, that will again encourage them to go onto multiple platforms rather than just one. So again, back to our tree. Our tree is that there are different ways of choosing where to play and how to win if you're the challenger platform to basically to assail the advantage of a large player that's not necessarily unassailable. I know a lot of these things can sound fairly conceptual, right? And this is, of course, coming from a strategy professor and strategy consultant. We like to think of the more conceptual levers that, irrespective. I mean, we're talking about real estate classifieds, but you can apply the same logic in any other platform industry. Whether you're looking at mobility, whether you're looking at other forms of classifieds, whether you're looking at hotels, whether you're looking at food delivery, anything else you're looking at, these principles will apply. And they're also very practical translations of these levers into very specific decisions that companies will be making, right? So ranging from sales to marketing to their product decisions to corporate development. So decisions on pricing, decision on the commercial structure, decision on how you structure your brand portfolio, decisions how you allocate your marketing spend, how you structure your referral programs, how you design your digital product, what is your tech stack, and then also critically on your corporate development and corporate strategy, who do I ally with? Do I play in various ecosystems? Which businesses I need to buy? So however conceptual these levers might sound, there will be really pragmatic, practical business decisions you'll need to make in your organization on these different functions to put these decisions to life. So with all of this, what I suggest we do is we take a few questions. I've seen some of them going through the chat. So hopefully this gives you a little bit of insight into our thinking on platforms. So basically, so let me just have a 20 seconds to quickly run through some of the questions that will have come through. If we were to go through almost go through chronologically, there's a question from Abu Bakr on what are the greatest advantages of being the number 2 platform instead of the market leader. And of course, the answer is it's a very tough situation. Actually, there might not necessarily be lots of advantages, but the silver lining of that is the advantage is that you might be a little bit more hungry, you might be a little bit more aggressive, you might be a little bit more keen on winning, because very often what happens is if your platform like Rightmove, for example, or like Scout24, if you are sat there just sleeping on the laurels of your very strong network effects, you might be missing exciting new things coming your way. So as a number 2 platform, chances are you're just a lot more keen on, you've got the kind of spirit of winning that I've observed with many number 2 players, and that can help you a lot, which is obviously a question of leadership more than a question of strategy, but it's a very useful thing over there. There was another question from Alim about the common mistakes that the challengers platforms make, and that comes back into some of my original arguments actually around, I think the biggest single mistake that a challenger makes is to go head to head with the same value proposition as the leading player. Because if you go head to head with a leading player with much deeper pockets, sitting potentially already on strong network effects, you will very likely lose. And that's not going to end very well for you. So avoiding the mistake of going head to head is probably the most important bit, which basically is then a sort of almost corollary to the question from Daniil later about, so how can a smaller platform compete with a company that has a much larger budget? And I think, Daniil, to just illustrate this, so the case of Kleinanzeigen, I think, is a great case where they started off in 2015 with basically a startup, right? In a market where there were already very large players, right? So, and they eventually, 8 years later, they were able to get to 18% market share. So they started off with zero, and then they're now with basically almost half the size, or at least a third, like more than a third of the size of the leading player. How do you get there? Well, you get there precisely by that smart choice of clusters where you play, right? So they said, we're going to play in private sellers rather than agents, and we're going to look at the cheaper properties. It's the segments where network effects are equally strong, but they're less served by some of the Scout 24s that are all about agents and all about the more mainstream properties. And they were going to create special features for them. So that actually helps you create a value proposition that can compete with the company, even though they have a much larger budget. There's then a question from Jangir about what strategies can help challenger platforms attract their first loyal users, and I think that's actually precisely about the how to win here, and this idea that by having product features that are adapted to the pain points of your specific priority users that are different from your competitors, like in the WG gesucht example, where if I'm going to target users that are, for example, looking for flatmates, and no one does that before, so their needs are underserved. That basically means that I can then attract these first loyal users much more effectively than a leading player. Because for a leading player to create any kind of adaptation, that makes it a lot more complicated, of course. And then there's a question of what role do network effects play in the success of digital platforms. And network effects, of course, like we said, is almost the primary driver of advantage. It's incredibly important that network effects will enable someone to basically sit on top of the connected bits of those two different sides. And if you're leveraging strong network effects, you will inevitably be in a stronger position than a competitor over the long term, which is why, of course, platforms invest to do all of that to a great degree. And again, then Ivar's question around, how can a new platform overcome strong network effects? I think that's also precisely where some of the levers here come in. So even if you've got a platform with stronger network effects, you can still grow the pie for everyone. You can create those priority features. We've been through this before, but also critically, however strong the network effects, if the multi-homing costs are low, there will still be a lot of competition, and you can still potentially win. So if you encourage that multi-home, if you encourage users using more than one platform, that will be really, really, really useful for you. And Zoopla is a great case example of that. So, and then I think Roman's question about which is a very interesting question, of how important is innovation compared to marketing. I think ultimately, the innovation and marketing, by innovation, I assume you mean product innovation, they will be quite complementary, right? So you need to have both innovation in your product, but you also need to then market that product so your users know the products that you're using. So, for example, if you're innovating by coming up with these new product features like WG gesucht, you need to make sure that consumers also know about them. But my point here would be that the most important marketing is the marketing of your differentiating innovative features. If your marketing is generic and all it does is it pitches you against that larger competitor, you're potentially just wasting a lot of money, which obviously is not something that we'd want to do, because they sit on stronger network effects. You're not going to be able to win head to head. So when you market, you need to market things that make you really differentiated. What are your differentiated features for your priority users? Is something that's an example of that. And then examples, real life examples of platforms that have become market leaders. There will be a fair few. I mean, Kleinanzeigen, for example, is now making even greater strides. So I guess you can have platforms that will be very strong trajectories. There will be very often, when you look at, for example, Uber and Lyft in the beginning, they were sort of similar size. Then Uber obviously became a much larger platform. So market shares will always be reallocated. These are very competitive categories. So there's always a trajectory for you if you play that game smart. Then I guess Konstantin's question about whether startup deciding whether to compete directly with a market leader or focusing on a niche. I think that this is sort of the point that here my colleagues and I are trying to really hammer, is this idea that going head on and competing directly with the market leaders almost always a losing game. So investing in the clusters where you have the right to win and you have strong network effects is almost always going to be the right thing. Take again an example, maybe echoing Konstantin's previous question about where have they become market leaders. If you take Bolt, which is an Estonian origin mobility platform operating around lots of places in the world, what they sense that they might have an opportunity to play in many African cities that are not as important for Uber because of the profit pools in there, and they have become market leaders in a number of African countries, although they were originally a challenger there. And they were a challenger there because precisely they chose where to play. They chose to invest in those clusters where there were strong network effects and they had a strong right to play. Whereas if they do also try to compete head-to-head with Uber in London and Paris, where their right to play is much lower, so that obviously turns into much more of a challenging story for them. So basically, and then on Dilavar's question of what industries have opportunities for new digital platforms to succeed, I think there are many. Having studied hundreds of different digital platforms, I think there will still be, as the economy develops and consumer needs of various sorts develop, there are new products and services, there will be often opportunities to platformize things. If you look for places with network effects, where does having more users or higher quality users create additional value for users in their existing form, that will be where you want to build a platform. And I encourage you to keep looking for that, because you'll see, if you look at platform chronology, there'll be more and more platforms emerging. So I do recommend that a lot. And then Dmitry has a fantastic question about how AI will change the way digital platforms compete. I think that, for example, for real estate classifieds, it's specifically an incredibly difficult time right now. You'll see a lot of their market capitalizations have gone down, largely because what AI does is it creates a very high risk of disintermediation. So if at least one of the sides of the platform has got a public inventory, meaning what's on the platform, like, for example, very often real estate agents will post their inventory themselves anyway. That will be something that an AI agent can scrape and can bypass and disintermediate those platforms. So I think AI is a very big risk for them that's priced in by their investors. So what they must do is they must actually, even some of the incumbent platforms might need to go into some of these how to win levers about creating new product features or leveraging complementary services so that it's more difficult for AI to compete with them. The things that are more resilient to AI is either where there's a significant human service component, where you need a human somewhere on the other end, because there's either tacit knowledge, it's not based on explicit data, you need human judgment, or where some things that are particularly time sensitive, like, for example, Uber will be very difficult for AI to compete with, because if I need a car in 3 minutes, it will be difficult for an AI agent that I built to contact 1,000 taxi drivers and figure out how many of them will be next to me very soon. So this, I guess, is a phenomenally interesting question, and that also, I guess, relates to what Vera's asking, her last question that we'll take here, around the metrics that startups should focus when measuring platform growth. I think you should focus very specifically on your user numbers and your gross transaction value relative to your competition. What kind of market share you're building? Because that's one important metric, but also the metrics around how resilient is my platform around some potential AI substitution. Because right now, a lot of the platforms are AI native, and if you don't think about it ahead of time, you might end up in a very challenging place going forward. With all of that, we are running out of time. If there are any remaining questions, I'm happy to take one or two. We've got 2 more minutes. But otherwise, just maybe a quick word to the organizers. Is there anything else that we could helpfully do with the 2 minutes that we've got left? And if not, then thank you very much to everyone who joined us this afternoon. It was a lovely having a discussion with you. Some very thoughtful questions. I hope this was useful. I hope you learned something about German classified adverts. But most importantly, even if you're not the market leader today as a platform, not all is lost. You can still find your way through that. And you know, in fact, there are quite a few ways of doing this that we explored together. The where to play, the how to win, the 4 levers of challenger platforms. Avoid head-on competition. And chances are you'll be able to create and capture lots of value for you, your teams, your users, and your shareholders. With that, thank you very much, and I will leave you to this.
Можно еще пару вопросиков от себя лично?
Да, конечно, пожалуйста.
Вы на английском только ответьте, я просто хорошо слушаю, но плохо произношу.
Of course.
Какой совет вы бы дали студентам, которые хотят собственную цифровую платформу создать?
I think this is sorry, you might need to just give me a second. Sorry. Just give me 1 second as we run.
Yes.
Right. So basically, I think my advice is specifically to look for these kinds of levers that we've gone through. So if you're starting a digital platform and there's already an incumbent player, you need to be very thoughtful, because otherwise they're just going to outspend you, right? So avoiding head-on competition is critical in these kinds of things. I guess that's probably the most important argument I would make.
Yeah. Тогда можно еще, наверное, один? Напоследок. Как успешным платформам удается находить баланс между быстрым ростом и прибыльностью?
This is a very, very interesting question, because if you obviously to a large degree, these might be trade-offs, right? If you want to create user growth, that will be you'll need to invest in subsidizing either side of them. However, precisely with these levers that we were talking about here, they're sort of the breaking out of that trade-off, because if you focus on, for example, product features, if you focus on complementary products and services, you can do that without having to directly subsidize. So actually, this might help you become more profitable while also creating growth, rather than saying, if I want to create growth, I'll necessarily need to make losses for a very long time. So that's what I would suggest.
So I think that's all. Thank you.
Terrific. Thank you very much. And yeah, enjoy your afternoon. It was lovely to talk to everyone.
Yeah, thank you. Goodbye.
All right then. Bye.